Have you ever found yourself wondering what truly happens when some of the biggest names in crypto start fundamentally rethinking their positions?
Yeah, or like if there's maybe a hidden strategy behind some of these big market movements, something the public just, doesn't really see.
Exactly, like a grand design sort of quietly unfolding right under our noses.
It's a compelling thought, definitely.
Yeah.
And it dives deep into, well, how information and maybe even carefully crafted narratives can shape how we all see the market.
You've hit upon exactly what we're going to explore today.
Sounds good.
Absolutely. Today, we're taking a deep dive into a truly fascinating and maybe a bit controversial corner of the crypto market.
Okay.
We're going to unpack some incredibly bold predictions, look into some compelling rumors, and yeah, even confront some pretty provocative claims about a potential, like, monumental shift of capital within the digital asset space.
Wow.
And our main focus, it's going to be on XRP and its purported foundational role in what many are describing as the rapidly evolving global financial landscape.
Right. So this isn't just about price swings then.
Not at all. It's about the very infrastructure of future money, potentially, and how it might be secretly, coming together behind the scenes.
Okay, I'm intrigued. So to guide us through this whole complex picture, we've gathered quite an intriguing stack of sources, haven't we?
We have. We've got everything from, like, viral market speculation, those eye-opening X posts from prominent crypto advocates.
Yeah, the ones that get everyone talking.
Totally. And then deeper analyses of utility, technical insights, and even some sweeping, almost audacious predictions about future potential.
So a real mix. Conviction, caution, maybe some hype too?
Pretty much. It's a rich tapestry of perspectives. So our mission for you today is clear. We're going to unpack these claims, really try to examine the underlying logic, or sometimes maybe the lack of it, and uncover what they might truly mean for the future of digital assets. And more importantly, how this deep dive can hopefully significantly enhance your understanding of this incredibly dynamic and often, let's face it, opaque space.
Yeah, it's not always easy to see what's really going on.
Exactly. This isn't just about what's happening on the surface. It's about trying to figure out what could happen, and maybe more crucially, why it all matters to you. Okay, let's unpack this. Right. Let's kick things off with something that really sent ripples through the crypto community recently. There's this viral X post making the rounds from Edo Farina.
Ah, yes, Edo Farina, founder of Alpha Lions Academy, right? Very long time, very vocal XRP advocate.
That's the one. His post put forth a suggestion that has truly sparked a fresh wave of speculation. He suggested that a significant wave of early Bitcoin adopters might actually be cashing out their BTC.
Cashing out Bitcoin. To buy what?
To rotate that capital into XRP.
Wow, okay, that is intriguing. We're talking about the OGs, the earliest investors.
Exactly. Imagine a major shift in sentiment and capital among crypto's earliest, most successful investors. The pioneers who got into Bitcoin when it was, practically an obscure internet thing.
Indeed. And Farina's remarks, they draw a very deliberate, almost strategic attention to what he sees as a profound strategic rotation.
He's not just observing, is he?
No, he's drawing this powerful historical parallel. Almost audacious, really. He likened the current opportunity to buy XRP near, say, the $2 mark to buying Bitcoin when it was trading under $100.
Wow. Just pause and think about that for a second. Buying Bitcoin under $100, that was a truly historic moment. Made a lot of millionaires.
Billions, even.
Yeah.
And Farina suggests that the recent dip in XRP's price below $2, which we saw correct pretty fast.
Yeah, it bounced back quickly.
He says that wasn't just random market noise, as many might assume. No, he frames it as a meticulously calculated trap.
A trap? How so?
Specifically designed, he claims, to shake out what he calls weak hands. Those investors who panic and sell at the first sign of trouble.
Right, the panic sellers.
Exactly, which then allows more savvy long-term investors to accumulate XRP at a lower, more advantageous price. It's a classic market manipulation theory, right?
Yeah, absolutely. Whether it's true or not, it definitely resonates with people who've seen similar patterns before in crypto.
Sure.
And he didn't just stop at identifying the trap, did he?
No, he went further. He claimed that some veteran Bitcoin holders actively used this dip as a strategic chance to exit their BTC positions and rotate that capital directly into XRP.
So a deliberate move based on this dip.
That's the claim. Their bet, according to Farina, is firmly on XRP's long-term breakout potential. They believe it's poised for an exponential surge.
Now, our sources do caution that this claim, well, it might lack concrete, verifiable on-chain evidence right now.
Right, that's the important caveat. We can't see that mass migration on the blockchain, not yet anyway.
But it has undeniably captured the attention of traders, analysts, everyone scanning the horizon for signs of a broader market shift, right?
Absolutely. What's truly fascinating here is how quickly a single strong voice like Farina's can ignite such intense discussion and speculation about major capital movements.
It really taps into that deeper narrative, doesn't it? Who controls the market? What's the smart money really doing? What's the next big play?
Exactly. And this XRP adoption narrative, it isn't actually new for Farina. He's been consistently, passionately promoting XRP as what he calls a sleeping giant.
Right, poised for mass adoption.
He even introduced this vivid concept of the XRP adoption candle.
The adoption candle. What's that supposed to signify?
It implies a coming, unmistakable wave of institutional use, greater regulatory clarity, maybe even those crucial ETF listings.
Ah, like the Bitcoin ETFs we saw, that kind of impact.
Precisely. In his view, XRP's core fundamentals, especially its proven utility in real-world cross-border transactions, its efficiency as a bridge currency, they're just becoming too compelling for the big financial players to ignore anymore.
So the practical application, solving actual problems for global finance, that's its ultimate strength, according to him.
That's the argument. It's undeniable ultimate strength.
And he delivers a pretty stark warning, too, doesn't he? One that really hits home if you've been in crypto a while.
He does. He warns his followers, basically, don't make the same mistake many early Bitcoin holders made.
Selling too early.
Exactly. Selling BTC at what seemed like a high price then, maybe $500 or something, only to watch it scream past $100,000 later.
Ouch. Yeah, that would sting.
So according to Farina, selling your XRP at what might seem like a good price today, say $10, maybe even $20, could one day look just as incredibly short-sighted. A missed opportunity of truly epic proportions that could, haunt investors for years.
It's a powerful psychological play, isn't it? Taps right into that FOMO, the fear of missing out on life-changing gains. That fear drives so many market decisions.
Absolutely. But it's crucial we bring in a reality check here based on our sources and the broader market view.
Okay, let's ground this a bit.
Despite Farina's compelling points and, his fervent belief, there is, as we mentioned, no easily verifiable on-chain data right now that confirms a mass migration of capital from Bitcoin into XRP.
So no hard evidence of that specific rotation? Not
currently visible, no. Now, it is true that XRP wallet activity has seen a significant surge. Pretty impressive, actually up nearly 500% since 2022. That definitely indicates growing interest.
500% is huge, but who's driving that growth?
Well, analysts observe that the vast majority of this growth seems to be driven by retail investors.
Ah, okay. So more grassroots interest and accumulation, maybe? Rather than a big, coordinated institutional shift or those early Bitcoin adopters moving en masse.
That seems to be the picture for now. It doesn't look like the systemic rotation Farina describes. Not yet, anyway.
And that's a key distinction, right? Because when we look at Bitcoin, well, it's still the undisputed institutional heavyweight.
No question. It continues to dominate capital inflows, long-term holding behavior among the big players. Even sovereign wealth funds are getting involved.
So while Farina's claim about Bitcoin OGs moving to XRP might be, let's say, more speculative than factual for now.
Yes, speculative is a good word.
It's undeniable that this narrative taps into a really powerful and frankly growing belief that XRP's long-awaited moment, its time in the sun, is actually getting closer.
It does feel that way sometimes. Whether the specific rumor about BTC holders holds water or not, it definitely reflects a palpable shift in sentiment within the wider crypto community.
Yeah, a shift that genuinely could redefine the next phase of market leadership, maybe, where capital flows next. It certainly gets you thinking about where the really strategic money might be looking. Building on that, it's really interesting to see something else our sources highlight. This noticeable shift in narrative, even among some self-proclaimed Bitcoin maxes.
Right, the hardcore Bitcoin believers, the ones who historically saw Bitcoin as the only true crypto, the ultimate digital gold.
Exactly. But now some of them are starting to shift their narrative quite significantly, actually, towards XRP. Some are even predicting XRP reaching like $20 or more.
Which is a huge change for a maxi.
Yeah.
It's not just a minor tweak. It sounds like a fundamental rethink about what value and utility even mean in crypto.
It does. So it raises that important question. Why? Why are these staunch Bitcoin proponents suddenly looking at XRP with such renewed almost surprising interest.
It's a great question, and yeah, our sources dig into the underlying reason for this evolving view. The shift apparently comes from a growing, maybe unavoidable realization.
Realization of what?
That, quote, Bitcoin has no real-world use case in the same functional, everyday sense when you compare it to assets like XRP.
Okay, that's a strong statement. Bitcoin as digital gold versus XRP for payments.
That's the angle. This viewpoint argues that while Bitcoin is powerful as a store of value, immune to inflation, digital gold, it fundamentally lacks that immediate practical utility that XRP offers. Things like efficient cross-border payments, tokenization, core financial innovations.
So the argument is becoming that XRP might ultimately offer more value, maybe even a better return on investment, because of its utility within the actual financial system.
Precisely. It's a big shift in focus, moving away from just speculative value or store of value talk towards emphasizing direct functional application and the potential for yield driven by actual widespread adoption.
Okay, now this leads us into some truly provocative and maybe, frankly, conspiratorial territory. It's important we present this just as a perspective found in our sources, right? Not endorsing it.
Absolutely. We're just reporting what's being said.
So Ida Farina, again, in his typically direct style, makes this highly controversial claim. He says, quote, government contractors are paid to deceive the masses and lead them to the slaughterhouse.
Wow. Okay.
Yeah.
That's intense.
It is. And he doubles down, suggesting that, quote, controlled puppets like Saylor, clearly referring to Michael Saylor.
Yeah, the prominent Bitcoin advocate.
Are invited on every major podcast to push the Bitcoin agenda to the masses.
Okay, and what's the alleged motive behind this?
The stated belief, according to Farina and these sources, is that they need exit liquidity, implying this coordinated effort to hype Bitcoin to retail investors so the early big holders can cash out profitably. He finishes by saying, it's all by design.
Right. The very strong accusation paints a picture of deliberate, systemic manipulation.
It certainly is a bold, maybe unsettling claim. And the reasoning behind it, as laid out in the source, seems rooted in this fundamental distrust of anything that feels overhyped.
Like if something's being pushed too hard, there must be something wrong.
Kind of. This perspective argues the relentless, aggressive promotion of Bitcoin by certain figures might actually be a smokescreen, a strategic misdirection.
Okay.
And the source goes further, mentioning specific speculative points about individuals like Michael Saylor and Jack Mallers, noting they have no family, talk from empty rooms.
What's the implication there?
The insidious implication, as suggested, is that they could just disappear before retail investors see major market downturns, leaving everyday folks holding the bag, stuck with assets that are tanking.
Ah, I see. It's tapping into those classic financial conspiracy tropes, suggesting a calculated plan to extract value from the less informed.
Exactly. And while these specific claims are, unverified,
Of course.
these kinds of narratives often gain traction in volatile markets, right? Where big swings make people look for external reasons, feeding a general distrust of centralized influences.
That makes sense.
Yeah.
People want explanations when things move fast.
And the source adds to this, highlighting a specific, almost uncanny observation on X, formerly Twitter.
What's that?
It notes you see the same people pushing the same narrative with what it describes as 30 people reply to it underneath that look like bots.
Like coordinated amplification.
Seems like it. Constantly promoting these simplistic, almost cult-like slogans. Bitcoin is the standard, magic money even, bizarrely, handed down from the gods.
Handed down from the gods. Seriously.
That's what the source quotes. And it bluntly calls all of this nonsense. It paints a vivid picture of this, carefully orchestrated echo chamber designed to just perpetuate one single narrative.
For the benefit of who?
Presumably, for the benefit of a select few who profit from this manufactured consensus. It really makes you question what you're seeing online, doesn't it? Is it real sentiment or something more controlled?
Definitely makes you think twice. And how does this section wrap up?
It concludes with a very stark warning from the source, one that's meant to hit home for anyone holding a lot of Bitcoin or thinking it's their only digital asset play.
Okay, what's the warning?
It states, unequivocally, something is coming, and when it happens, a lot of people, a lot of retail investors are going to be stuck in Bitcoin forever.
Wow. stuck forever.
Yeah, as a company. It suggests this deeply held belief by the source that Bitcoin, despite its current dominance and market cap, might be poised for a significant reevaluation, maybe even a dramatic downturn that catches many unprepared.
Especially if they haven't diversified or understood the utility plays happening elsewhere.
Exactly. It's a powerful final thought for this section, really designed to provoke critical thinking about your own strategy and the potential for, well, a paradigm shift.
Okay, so let's pivot now from those cautionary tales and maybe conspiracy theories to some truly audacious predictions. Because this next bit, coming from a researcher known just as Smoke, introduces this incredible narrative, the path to XRP trillionaire status.
Trillionaire status. Wow. Okay, that's a big claim.
Huge. And to really grasp the scale, remember back to early 2018?
Vaguely, yeah. The big run-up.
During that wave of crypto adoption, which seems kind of modest now in retrospect, Ripple co-founder Chris Larsen briefly became one of the richest people on the planet.
I remember that. It was all over the news. How did that happen again?
Through XRP's explosive price rise and his significant stake in the company and the asset, it was a moment that really redefined what seemed possible in digital assets, opened a lot of eyes to the immense wealth creation potential.
Yeah, it definitely put crypto on a different level for some people.
And this is exactly where the bold projection from our source from Smoke comes in. According to them, that astonishing rise in 2018, that was just the beginning.
Just the beginning. So what's next?
The emphatic claim is, the next wave is global. The source goes on to state that while people historically doubted crypto's ability to create such massive wealth, often dismissing it.
Yeah, as beanie babies or tulips.
Right. They predict that cryptocurrency may produce the world's first trillionaires in the next decade.
The world's first trillionaires from crypto?
Yes, the prediction. Not just a few more millionaires or billionaires. A complete reordering of global wealth, a seismic shift on an unprecedented scale.
That's hard to even conceptualize.
It argues that the exponential growth coming from the altcoin sector will shatter all skepticism about digital assets, forcing even the most hardened critics to face this new reality.
So the message is ignore crypto, especially utility altcoins, at your peril. You'll miss the biggest wealth transfer ever.
That's a very strong message, yes. And to tie it back to Chris Larsen specifically, the source projects there's a very good chance that Chris Larsen will be a trillionaire in January of 2026.
January 2026, that's less than 2 years away, a trillionaire, driven by XRP.
That's the specific mind-boggling prediction.
Wow. Okay. It sounds almost impossible, but then you have to look at the underlying mechanics, right? And yet, despite that kind of potential, the source insists XRP is just at the beginning still.
Right. The current focus, it suggests, is mostly on Bitcoin's dominance. Everybody always points at the price of Bitcoin. It says, obsessed with the ups and downs.
Yeah, Bitcoin gets all the headlines.
But the prediction is clear. Wait until they're pointing at the price of XRP. The expectation is this shift will happen, and when it does, it will be all over the mainstream media news, forcing this global reckoning with XRP's true value.
And this isn't just based on hype, is it? It seems rooted in fundamental utility.
Exactly. And that brings us to the core argument for XRP's foundational, almost architectural role in a new global financial system. We get some really fascinating insights here from Jack McDonald.
What does he say?
He discusses how the XRP ledger is really purpose-built for payments and tokenization. It's not a side feature. It's central to its design from day one.
Purpose-built, okay.
And McDonald emphasizes that a multi-chain strategy is critical to stablecoins for future widespread institutional adoption.
Multi-chain strategy. What does that mean exactly?
Imagine a digital financial world where different blockchains or chains tend to have inherent biases, right? Or build for specific things.
Okay, like one chain is good for speed, another for smart contracts.
Exactly. The XRP ledger excels at high speed, low-cost payments, and tokenization. Other chains might be better for complex smart contracts or privacy. The goal is to have stablecoins that can work across these different chains.
Ah, so they're not stuck on just one network. Interoperability.
Precisely. Giving users flexibility and broad reach. It's key to breaking down those old banking silos.
That makes sense. And McDonald also talks about programmable money, right?
He does. He highlights how digital assets like RLUSD, that's the Ripple-backed US dollar stablecoin, are specifically designed to be more efficient to move.
Faster, cheaper transfers.
Yes. But not just that. It's about reducing friction, costs, time, and global transactions. And crucially, if they're properly regulated, they become more transparent, offering certain advantages over something like Tether USDT, which has faced questions about its backing.
So it's like a fundamental upgrade to how value moves, with built-in integrity and efficiency.
That's the idea, allowing money to be programmed to do specific things automatically. It could unleash incredible innovation.
Okay, but where does XRP fit into this RLUSD picture?
This is precisely where XRP's role as a bridge currency becomes absolutely critical. McDonald explains it brilliantly.
How so?
He states that RLUSD is built to move value globally, but it still needs a bridge, and XRP will be that bridge.
Okay, it needs a bridge. Why?
He uses the example of bank tokens.
Imagine.
If you have a Citibank token, basically digital value within Citibank's system,
Right.
it's only going to be used within Citibank. You can't directly send that token over to JP Morgan Bank because they're not going to accept Citi's coin.
Right.
It's like trying to use Tesco Club Card points at Sainsbury's. Doesn't work.
Right. Closed systems. The current problem.
Exactly. So when Citibank needs to send value to JP Morgan, maybe for international trade, how does it work with this new tech? It goes into Citicoin to XRP to JP Morgan coin.
So XRP is the middleman.
The neutral intermediary. Ultra fast, ultra low cost. It converts the Citicoin to XRP instantly, sends the XRP globally in seconds, and then converts it just as fast into JP Morgan coin on the other side.
Seamless, instant conversion and transfer.
That's it. That's why a bridge currency is so important. It enables true interoperability between different banks, different digital assets, allows anything of value to move efficiently without needing those old, slow, pre-funded accounts.
That gives XRP immense fundamental value then if it becomes that global bridge.
That's the core argument.
It's incredible thinking about the foresight, or maybe just the timing, that our sources highlight. It points out this intriguing coincidence. Almost too perfect.
What's the coincidence?
Ripple emerged as a company in 2004.
Okay.
ISO 2022, that critical global financial messaging standard, like a new universal language for banks.
Yeah, super important for modernizing payments.
It also launched in 2004.
Huh. Yeah.
And a work on the Interledger Protocol, ILP, designed to connect different payment systems, also started in 2004.
Wow. Ripple, ISO 2022, ILP, all kicking off in 2004.
Yeah. The source doesn't really hold back, suggests this wasn't just chance. It says directly this was planned all along, implying this grand, orchestrated design for global finance, with XRP and its tech playing a central preordained role.
That's a bold take. And that planned aspect, it extends to the Interledger Protocol itself, right? ILP.
It does. The ILP is set to open up the ability for micropayments, which would revolutionize everything.
Offering payments, like paying tiny amounts for things.
Exactly. Imagine getting paid in real time for your work, instantly, second by second maybe, instead of waiting for a paycheck.
Wow.
Or being able to buy just one news article instead of buying the entire newspaper subscription online. Tiny, instant value transfers.
Across different networks and ledgers.
That's the goal of ILP, breaking down financial silos, creating a seamless global economy for value exchange. The source emphasizes ILP will play a very big role in the future digital economy, connecting IoT devices, paying each other, people getting real-time income streams.
And how does this benefit XRP?
Crucially, it's going to bring a lot of value to XRP at the same time, because XRP is perfectly positioned to be a key asset within that interoperable framework, the low-cost, high-speed bridge for all these microtransactions.
So it's about enabling granular value exchange globally, making the Internet of Value a reality, finally.
That seems to be the vision laid out. Okay, let's bring this back down to earth a bit, back to the immediate market and what, many of you listening are probably watching very closely. XRP's current price.
Right, the day-to-day action.
Our sources note it's been sort of moving within the $2.20, $2.30 range for quite a while now. Feels like consolidation, maybe a bit boring for some, but maybe building energy.
Yeah, it occasionally dips a bit below $2.20, but it snaps back pretty quick. Shows a consistent floor, some resilience there.
Exactly. But here's the kicker, the exciting prediction from the source. It states flat out that something is going to break, and when it does, XRP is really going to go on a ripper.
A ripper? Okay, that's a pretty direct language, suggesting a significant explosive move upwards is coming.
Not just hoped for, but anticipated as maybe a technical inevitability after this long consolidation.
And the anticipation for that breakout, it's definitely palpable among analysts looking at the charts. The source identifies a very specific trigger point for what it calls exciting times.
What's the trigger?
It says once XRP gets above $2.60 and holds above $2.60, that's the key. That's when we can truly anticipate a significant upward move, a clear break.
So $2.60 is the magic number to watch. Breach it and stay above it.
Seems to be the crucial technical level identified. Once that happens and holds, it's expected to signal a decisive shift. The idea is that the long-standing resistance keeping the price capped will finally give way.
Potentially unleashing a wave of buying pressure. From retail, maybe institutions waiting for confirmation.
That's the theory. People who've been sitting on the sidelines might jump in.
And the confidence in this future path is really striking, isn't it? Almost defiant.
Yeah, our sources highlight that common sentiment among skeptics, noting everybody thinks XRP is never going back above $3. People get stuck in the present, right?
They extrapolate current trends. But then comes the direct counter from the source. When it happens, I'm telling you, it's going to take so many people off guard.
It's not just a price prediction then, it's a commentary on investor psychology.
Totally. And the source paints this vivid, almost painful picture of future regret for those who wait too long.
How so?
People wishing they'd bought more at $2.20 when it's sitting at $3.60. And then, maybe even worse, regretting not buying at $3 when it's, quote, sitting above $10.
Oof. Yeah, that shoulda, woulda, coulda feeling is rough in investing.
It reinforces that age-old dilemma, doesn't it? Do you buy when it's boring and consolidating, when the price is stable and no one's really paying attention?
Or do you wait for that confirmation, wait for everyone to scream, alt season, but potentially miss those huge early moves?
Exactly. This dynamic points to those two different approaches. Some people, as the source describes, buy while they can during the boring phase, accumulating quietly, patiently.
They see the potential before the herd arrives.
Right. Others, though, are hesitant. They need certainty. They have to wait for that confirmation to happen that we are now in alt season.
But by then, prices have often already made a big jump. The risk-reward has changed.
Precisely. That psychological barrier, needing external validation, can stop them from buying at better levels. They end up chasing the market.
Fear versus patience. And the source clearly favors patience here.
Definitely. And speaking of consolidation, the analyst Credible Crypto makes this fascinating observation. Really underscores the long-term bullish view for XRP.
What's the observation?
They point out that XRP is going on its 8th straight month of consolidation above the prior all-time high monthly close.
8th straight month above the prior all-time high close.
Wow, okay.
Think about that. Almost a full year building this strong base above its previous peak on a monthly closing basis. That's not just a small correction, it's a powerful accumulation phase, technically speaking.
So what's the takeaway from that?
The source's unequivocal takeaway, quote, "You are not bullish enough."
Haha, okay. A direct challenge. It's saying the charts are screaming for a big move, like a coiled spring.
That's the implication. A huge amount of stored energy ready to be released.
And when we look at the charts through the lens of analysts like Credible Crypto, they do suggest that technically the better return on investment is XRP compared to others, maybe?
That's the analysis presented, not just gut feeling, but based on historical patterns, market structure. And Credible Crypto gives specific predictions for the breakout.
Oh yeah, what are they?
They show the first push-up, around $16.
$16 from current levels.
Okay.
And then following that, the next push is going to be around $28.
Wow. 16, then 28. Those are not small gains. We're talking multiple X's.
Exactly. And the broader belief articulated in our sources is that the catalysts are all going to play out and push this cryptocurrency even higher.
The catalysts being things like regulatory clarity, adoption, maybe ETFs.
All of that. And interestingly, the current stability, the price holding above $2, is attributed by these analysts directly to one specific influential factor.
How so?
The presence of a pro-crypto administration.
Ah, the political and regulatory environment.
Yeah. The idea is that this shift provides a more favorable, less hostile backdrop for digital assets, reduces uncertainty, acts as a foundational support for current prices, and really paves the way for future growth. Sets the stage for those catalysts to really hit home.
Okay, so let's zoom out even wider now. Our sources deliver this bold, almost cinematic statement that tries to capture the future of finance. Ready for it?
Lay it on me.
The ISO coins aren't coming. They're taking over.
Taking over? Okay, that's dramatic. What does that mean?
It's not just about new digital assets popping up. It's about a complete, deliberate integration into the existing global financial system. The purpose of these ISO-aligned coins, as the source puts it, they are engineered to sync with the $150 trillion banking beast when SWIFT flips the switch.
Wow. Engineered to sync with the banking beast. That implies a deliberate, coordinated effort, right? Integrating digital assets right into traditional finance, a process already underway.
On a massive, almost unfathomable scale. That's the picture being painted.
And this underscores a core message, doesn't it? A fundamental insight for anyone trying to figure out the future here.
Absolutely. If you're ignoring utility, you're ignoring the next trillion-dollar rally.
So the value proposition is shifting away from pure speculation or just being digital gold towards tangible, real-world application within the established financial systems.
That's the argument. The deep integration with existing banking infrastructure, especially through universal standards like ISO 2022, mechanisms like SWIFT. It points towards practical, massive-scale adoption.
And that's where the real institutional money and long-term sustainable value will be, driven by efficiency and necessity, not just hype.
That seems to be the core belief presented in these sources.
Okay, so while XRP clearly plays a huge role in this vision, our sources also encourage us to look broader, right? Suggesting there are other cryptos out there that are also very undervalued and strategically positioned.
Yeah, it's not about being loyal to just one coin. It's about strategic diversification, looking at the whole ecosystem.
Encouraging you, the listener, to consider a wider portfolio. Don't put all your eggs in one basket, but look at other assets poised for growth in this new financial paradigm.
Recognizing the interconnectedness, maybe the complementary nature of different assets building out this next generation of finance.
So what are some of these other examples our sources mention? These potentially undervalued, ISO-aligned assets.
Okay, they give quite a few compelling examples, each with its own utility focus.
Let's hear them.
First up, XDC. Described as criminally undervalued.
XDC, Chinfin. What's its focus?
Yeah, Chinfin Digital Contract. It's a blockchain platform built specifically for global trade and finance, bridging TradFi and blockchain for enterprises, supply chain, trade finance, real-world stuff. Makes its current valuation look potentially very low.
Okay, XDC. Who's next?
Then there's XLM Stellar Lumens, which notably runs with XRP.
Stellar. Also for payments, right?
Yeah, fast, low-cost cross-border payments, maybe more geared towards individuals and small businesses compared to XRP's institutional focus sometimes. Holding both could be complementary. Similar vision, different niches maybe.
Got it. XLM, what else?
Algorand, highlighted as having one of the best ecosystems in this space.
Algorand, yeah. Known for its tech.
Pure proof of stake focuses on scalability, security, decentralization. Designed to host financial products, applications, DeFi, NFTs, enterprise solutions. Robust tech, active community. Lots of long-term potential cited.
Okay, Algo. Keep 'em coming.
A massive sleeping giant is how IoT is characterized.
IOTA, that's the one without a traditional blockchain, right? The Tangle?
That's it. Designed for frictionless data and value transfer, especially for the Internet of Things, IoT. Think micropayments between machines, supporting a machine-to-machine economy. Huge future market, often overlooked.
Interesting. IOTA and HBAR.
Hedera, singled out for having a fantastic run. With so many things have been building around HBAR, enterprise-grade dApps, big partnerships.
Hedera is known for enterprise focus too, yeah.
High speed, low fees, secure. The expectation is when it breaks out and shows its actual value, it's going to shock everybody because its utility is deep, but often built quietly within corporate systems.
Okay, HBAR, that's quite a list already. Any more standouts?
Oh, yes. Then there's QNT, Quant. This one gets a passionate defense.
Quant. Some people think it's already expensive, right?
Yeah. Everybody thinks it's overvalued, is what the source acknowledges. But it argues fiercely against that, points out there's less QNT than there is Bitcoin.
Less supply than Bitcoin.
This extreme scarcity, plus its utility, leads to a bold prediction. Why the hell would you not be buying Q&A at $100? This is an easy 6-digit asset.
6 digits. Wow. What's its big utility claim?
It goes further, stating QNT is going to make Bitcoin look like trash when it really starts to break out because there's less of it and it has a ton of utility. Its core purpose, to be built to hold the entire financial system together through its overledger operating system.
So it's about connecting everything. Blockchains, TradFi systems, interoperability at the core.
Exactly. Not competing as a currency, but as the operating system connecting all currencies and data at an enterprise level, a critical foundational role.
Okay, QNT, that's a powerful pitch. And does it go even deeper beyond these main ones?
It does. The source references John Squire's mapping of other cryptos expected to be part of ISO beyond the obvious ones.
John Squire, a researcher known for digging into this ISO 2022 alignment stuff.
That's him. Known for detailed work identifying projects aligning with these emerging global standards based on tech, partnerships, goals. His mapping suggests this broader ecosystem, all playing distinct but complementary roles, often building quietly.
Encourages you to really dig in and find those hidden infrastructure gems.
For sure. And John Squire's analysis, according to the source, expands the list of assets expected to survive and thrive when, quote, 99% of crypto disappears.
Ouch! Only the utility-driven, compliant projects survive.
That's the provocative idea. So these additional assets are presented as integral to this future.
Like who?
Includes LCX, highlighted as a fully regulated exchange, and blockchain infrastructure company regulation being key. Also Casper, scalable POS blockchain, Dagriff, Constellation for big data, Nexra, bridging DeFi TradFi, AEO, LF0, privacy layer 1, Stronghold, financial infrastructure, Velis, fast blockchain, and Ono, social network blockchain.
Wow, quite a few more, all termed great investments because of their utility and alignment.
Yeah, suggesting strong fundamentals, strategic positioning to endure long-term, unlike assets without clear use cases or regulatory paths.
And there's that fantastic, almost contrarian anecdote about LCX, right?
Yeah, it really exemplifies the kind of thinking sometimes needed here. The source mentions they actually bought more LCX when Gary Gensler, the SEC chair, called it a security.
Which sounds like bad news, a reason to sell for most people.
Exactly. But for some investors, that negative regulatory label can, ironically, be seen as bullish.
How so?
It implies the asset is significant enough to catch regulators' attention because of its potential integration into regulated markets. Might pave the way for clearer rules, not an outright ban, like reverse psychology bad news as long-term validation.
Fascinating mindset. Okay, finally, this leads to the idea of a global currency war.
Yeah, the source introduces it by noting everybody's always talking about World War III breaking out. We are in a currency war, and adds the AI war, too.
So fierce competition between nations for tech and financial dominance in the digital age. Reframing geopolitics through digital assets.
Pretty much, where nations are vying for control over the future of money itself.
And this currency war is playing out right now, especially with stablecoins.
Actively, yes. European regulators, for example, are issuing urgent warnings that USD stablecoins threaten euro sovereignty and stability. They see the dominance of dollar-backed stablecoins as a major challenge.
Undermining the euro standing.
Right, which has directly led to the MiCA regulation in Europe. MiCA, the Markets in Crypto Assets Framework. It's designed specifically to boost euro-backed digital innovation.
A clear move for Europe to control its own digital financial destiny, not just rely on U.S. solutions, level the playing field.
That's the goal.
Yeah.
And it naturally sparks this big debate, which the sources cover.
Private stablecoins versus a central bank digital currency, a digital euro.
Exactly. The source expresses a clear preference. It argues that if the EU went in the same direction as the U.S., meaning clearer, maybe more favorable rules for private stablecoins, then it believes more people would be willing to utilize, say, RLUR, a potential Ripple-backed euro stablecoin, rather than a digital euro central bank digital currency.
Why the preference for private stablecoins?
Maybe more trust, efficiency, innovation compared to government-issued CBDCs. That seems to be the underlying view. The main point is countries globally are pushing to have their own currency in their country, like a level playing field, digitally. Not just rely on USD stablecoins.
A massive global push for digital financial independence and diversification, then, reshaping international economics.
Fundamentally. Hashtag outro.
Wow, okay. We have truly navigated a sprawling, complex, and incredibly compelling landscape today, haven't we?
We really have. From bold market speculation, those potential seismic shifts among crypto OGs.
Yeah, to the fundamental, almost architectural role of assets like XRP in building what some believe is a whole new global financial system.
It's undeniably clear the crypto space is anything but static. It's living, breathing, evolving constantly.
Demands constant reevaluation, deep thought, and, a willingness to look beyond just the surface noise.
We've explored those audacious claims of strategic capital rotations, the shifting narrative beyond just Bitcoin maximalism.
And those almost unbelievable projections for assets like XRP hitting trillion-dollar valuations by basically providing the plumbing for global finance.
It's a narrative that really weaves together cutting-edge tech, crucial regulatory moves, and fundamental utility, suggesting a deeply intentional, accelerating path for the future of money.
And what really resonates most powerfully, I think, from our sources is this core idea. We are not just observing a volatile market.
No.
We are potentially witnessing a meticulously planned, almost orchestrated evolution of global finance. Not random, but a profound systemic shift.
Okay, so if ISO coins are truly engineered to sync with the $150 trillion banking beast, as our source dramatically put it,
Yeah.
and if assets like XRP are built to be that essential, indispensable bridge currency in this new reality, what does that actually mean for the traditional financial system as we know it?
And maybe even more fundamentally, how might it reshape our understanding of money itself and our place within that system, perhaps in the very near future?
A huge question. We'll leave you with that thought to ponder.